had a call with a client the other day, and we actually had a phone call with their other financial advisor. You know, we're not somebody who's going to tell you you can't have another advisor. There's quite a few different people who have that. They feel that, you know, two heads are better than one. The one issue that you've got to make sure you're watching out for is making sure that everybody's on the same page. But this call really took me back quite a bit here because it shocked me and what ended up happening with the call and that advisor, and it really sparked me to make this video. And so if you're on the fence with your financial advisor and you're trying to figure things out, I'm going to really break this down for you, but let me first kind of dive into this call and exactly what happened. Just to give you an idea, the client is in their 80s, and the client gets a little just confused in general. It's not something we do have to report. If there are major issues, we need to make sure that we're letting people know if there's something along the lines of we think there's dementia and they can't make decisions for themselves. In this situation, though, that's not completely the case. The client's consistently always been confused with the required minimum distributions and having to take from a pre-tax account, and the fact that they have paid taxes their whole life, but now they have to pay more taxes. So I tell you that just as a kind of a little bit of painting the picture of what's going on here. And so the client and I were speaking, and we talked about their required minimum distribution that they're going to have to take from our account. Then we discussed having to take the minimum distribution from the other account. Now, the account that we're managing for them is for grandchildren. And for the reason for that, they don't want to take the required minimum distribution from this account. They want to take it from their larger account from the other advisor. Now, with doing that, the other advisor's account is a little bit finicky because the account is held with private stock. So it's not something that's publicly traded. It's a little bit different on the way the circumstance works here. And so there are a couple extra hoops to go through. But what I did was talking with the client, they wanted to take the RMD from there, but they didn't want to pay any additional tax. So what I did was I broke this down in an email and sent it over to the advisor, really just laying out all of the different factors of what was needed, how to do this, how to structure everything so that that person wouldn't have to pay any extra tax, still take their RMD and have everything work just as they were hoping for. Well, on the call with the advisor, we had an additional call, and actually the advisor directly called me and said, hey, I got your email, but I just want to let you know we're not going to stand on our head, direct words, stand on our head to make this happen. It took me back quite a bit because I was kind of blown away. I'm like, what do you mean stand on your head here? And so then the gentleman went on to say that how, well, this is a bit more of a complicated process because of this and this. And when it comes to it, withholding tax on something, and I had already done all the math for the person. He said, with withholding tax, you're talking multiple different transactions now. And I shared with him how we're both advisors, and he really kind of got an attitude with the whole situation. And I told him, I said, stop for a second. I said, we do the same exact business. I said, withholding tax is not an issue. You actually have the same platform. They also custody with Goldman Sachs. And so it was very cut and dry on this situation. I left that call quite frustrated with that advisor, and in a sense kind of really questioning myself on other advisors and kind of how they do it, because when I got into the financial industry, part of it was wanting to be the difference, because I had some advisors that were more of an insurance salesperson that were trying to sell me a bunch of products. So going now to kind of present reasons to think of maybe firing the financial advisor. I'm not saying that needs to be the case, because, right this second, you could look at your returns and maybe the S&P's beating what your portfolio is, or maybe your advisor's beating them, whatever the case is. There's a lot of reasons to say, well, this year this is going on, that year that's going on. But I really want to talk through true things here, because with this advisor, really one situation, and one of the main reasons I would say that you don't want to work with that advisor is they don't hear you. They don't hear what your goals are, what your needs are. If your advisor is not talking with you whatsoever, they're not, really trying to listen on what you're saying and trying to figure out what your goals are, such as this client did not want to pay more tax than their RMD out of what they already had to take out with their RMD. They didn't want to have to sell more dollars. If that was the case, this advisor obviously wasn't hearing that client whatsoever, not willing to work with them. So you've got to first look at that. Is your advisor listening to you? Now, the second thing, though, that kind of is a little bit unique when it comes to this is you also don't want the yes man or yes woman. So yes, you want your advisor to hear you. And And in this advisor situation, it wasn't that they were, they obviously weren't a yes man or yes woman, but they also weren't hearing the client and addressing their needs. What I'm talking about with the yes man and the yes woman is somebody that you're just going to contact and you're going to say, hey, I'm going to buy a car for $50,000. I need to pull out of my brokerage account tomorrow and do that. And the advisor should know you enough to potentially, depending on the scenario, hopefully say, okay, well, let's think through this for a minute. I always try to tell clients, okay, well, why don't we have a call first so that we can really discuss the options here, figure out what is necessary to make sure that they're making the right decision with their dough. It may be to pull from the brokerage account, or what if they have a significant amount of capital gains tax in that brokerage account, or the market's really down right this second and we're waiting for a recovery in that account and they're trying to pull from it and it's at a low. There's a lot of various scenarios why I may say, hey, let's consider something else potentially if the cash flow is there. And so you really want to make sure that you're, being heard. You also want to make sure that they're not the yes man or yes woman, just agreeing to everything that you think is best and not really presenting the facts of what is best for your scenario. And the third one is one that, again, kind of goes along with this other advisor, because talking with a client, they shared with me that they hadn't actually really spoke to that advisor. They'd been speaking with their assistant since the husband's passing nearly 15 years ago. And so they haven't even actually had a conversation with this financial advisor whatsoever. And now you're thinking probably, okay, well, I'm sure you told the client, fire them, just come bring all of your assets. And I actually didn't. And the reason for that is, again, the client is a bit older. I'm not trying to create a lot of confusion in this scenario with her. And as well as that, the private stock position is a little bit unique and something that really has to be maintained with that other advisor. And the advisor knows that, and that's why they were doing what they're doing and being the way they are. Though with this advisor, the fact is the third one not being able to be reached and making sure that your advisor is accessible. We're very unique here at Jazz. Doesn't mean I'm not trying to make a commercial on this, but the way we often do things is having a calendar link so that a client can actually just schedule a call instead of, having to call and get through a gatekeeper and figure all of these things just to get somebody to contact. Really just making sure that your advisor is actually accessible for you. So those are various reasons why it's not, talking about all the problems of, advisors. And I'm sure that in the comments, you could probably list tons of other reasons why you should can your advisor. But at the same time, there's a lot of good that comes out of having a financial advisor. Or maybe you're really comfortable doing it on your own, and that's okay too. So it's a little bit of just unique conversation here to share with you an experience and a story. Let me know what you think about it in the comments.